All right, trade recap time for Wednesday. Today is Wednesday, April 2nd. Forgot what day it was here for a second. April 2nd. And yes, I had a losing day today. Shocker. Not really. But, we all got to lose sometimes. I was on a 6-day win streak. I believe it was a 6-day win streak. So I know in my win rate for March was really high compared to my average. So I know you have to start thinking, hey, a loss is bound to come, right? And when you get on those winning streaks, you want to keep going. Like who wants to stop a winning streak, right? You want to keep going, but that's where you have to make sure the highs are not too high and your lows are not too low, right? There's a book I read a while back called Peaks and Valleys. Very good book. You have to control your emotions. And when the going's good, when you're doing really well, don't get too high because nothing lasts forever, right? You're bound to have a time where you come back down. And when you're down, it never lasts so long. So, just try to float in the middle there. Keep your discipline, keep your mind in check, and you'll be all right. So, as always, I'm starting here on the daily. Lately, I've been starting on the weekly chart, right? But here's what I'm looking at. Kind of messed up a little bit. Not really messed up, but let me just show you what's going on. All right, so I've been pointing out this volume imbalance, right? I've been pointing that out for a while. We almost touched it today. We didn't quite get up there, which that was a rally, right? Like it got a little wild at the end of the day, but let's mark that out. All right, that's that volume bounce I've been talking about. Then we have this daily fair value gap right here. Okay. And I'm going to leave this daily fair value gap here. But what I did, you see this volume imbalance right here? I had my fair value gap pulled down here because you typically include the volume imbalance. And that's going to make a little bit of a difference there. Kind of. So what this does is if I have my fair value gap right here at this wick, you can see the midpoint of it, consequent encroachment right here is about 714-ish. Okay, and if I pull it down, we're looking at about 690. So we have a 24-point difference there. It could make a difference if you're looking for a draw, right? A draw for price to draw somewhere, okay? I'll show you where I'm getting at as we start dropping those time frames. But regardless, whichever way it is, this is where we opened, all right? We opened here, and I'm like, hey, because today's Wednesday. So we open here, and I'm like, hey, we're going up. We're likely going to go to the midpoint of this fair value gap. Like we're already pretty deep in it up here, right? So we're likely to get there. This is a huge area, huge level. So if we're this close, we're more than likely going to get there. It's just usually what's going to happen. We're either going to get there and come down, or we're going to trade up and rebalance this. Like that's just what I'm expecting. All right, so that's what I'm expecting. All right, so now let's drop down into time frames. Take a quick glance at the 4-hour. Okay, so here's where we were over here, right in this area. So I'm like, okay, right here. What we did was, if you look at this 4-hour fair value gap right here, let's change the color a little bit or darken it up. Look at this midpoint right there. Tuesday night went right up there, and I'm like, oh, okay, I see that. Then we pull down, and then we have our 10 o'clock right here. So we're down in this area. And I'm like, okay, we just came from there. Are we going to come down and take these lows? I don't know yet, but I just kind of note that, like, take a mental note of where this 4-hour fair value gap is. Drop down to the 1 hour. Today, I might actually accomplish my goal of being around 10 minutes or so because I took a loss today. Nah, I probably won't. But anyways, so here's that volume imbalance. All right, here's the 1 hour. No, sorry. Here's the 1 hour. Okay. Now here's that 10 a.m. So I'm looking at this low right here. Okay. I'm looking at this low, but also before that, look at this smoothness right here. So I'm looking at this smoothness. I'm like, okay, here's likely to be, because we're pretty much here. Let me put a 9 to 10 a.m. So we're pretty much in between these two candles right here, right? So I'm like, okay, we made this low right here. So this is going to be my sell side liquidity right here. But then we had this low. I'm like, no, this low right here took this sell side liquidity, and then we came up with some displacement. So we do have this little volume imbalance right here, but I'm kind of like, we already came down, right? So I did want to take note of this inversion, because as we came back down, I wanted to see if this inversion did anything. So I took a mental note of that. But then what I was really looking at is because this bar right here took these highs, right? And then we immediately came down and created this fair value gap right here on the 1 hour. So I'm looking at this 1 hour right here. So I'm going to mark that because I had that one. I'm like, okay, then we had this smoothness right here. This swing is what I was looking at for my buy side right here. So, okay, there's a buy side liquidity. It's a good area for price to go up to. I'm pretty sure price is going to get there. This was the low that it made. And then the next low is here. And there's no real, there's this 1 hour fair value gap, which I had marked, in case if that's as low as it wanted to go. And then if you take this wick and look at that, let's get rid of this. Look where price came down to, right at the middle of this. It's like, ooh, okay, so this is a nice little draw, right? This is a draw. After it draws here, we're likely to head where? Right up to this buy side liquidity in this 1 hour fair value gap. So that's what I was looking at. I actually preferred to take a long from around this area to go up. But that did not happen. So the next area I'm looking to short would be if I get something in this area right here, and then I get my entry to go down, I'll be looking to go down somewhere. And we have, where would I be looking? I mean, we have this. Well, actually, this bar hadn't closed yet, so we didn't have that fair value gap yet. So anyway, so this is kind of my framework. This is my framework now. We have the sell side. I'm expecting price to come here and then run up through here. Okay, but as you can see, it did that before I even traded. So let's get there. We'll drop down again. Drop down time frames. Does those markings align with what I'm seeing on the 15-minute? So sell side. Sell side was here that I had, that swing low. And then it kind of pulled up. And then right here, 9:15, 9:30, it created this low inside that 1 hour fair value gap, sweeping the sell side, right? And we had, I think I had this 15-minute fair value gap marked as well. If I remember right, I might have. I don't remember if I did. I'll pull up my chart here in a second. Like, okay, yeah, I think I did, because we came down right in this area, and then bam, displaced up, right? So we just went up. So literally, I'm just sitting here watching a lot of the times the 15-minute chart, because I don't want to get caught in any type of trap, right? Where it comes up somewhere here, which it almost, there was actually a setup where a lot of ICT traders may have went short before this area. So I went here. I'm like, no, I want a draw up here. Then I'll be looking for my entry, because this is very clear to me. Buy side liquidity, 1 hour fair value gap. We're going to draw up here. After that, I may get a retracement down somewhere. Maybe not all the way through sell side, but that's also why I take the low hanging fruit. I'm just looking for a retracement in this, unless we get a clear market structure, unless it's really clear that we're going to run sell side or not sell side, but lower because we already ran sell side. So that's why I'm not expecting after we draw up here. That's why I'm not expecting price to come all the way back down because it swept the sell side. Like I'm expecting it to do here, maybe get a pullback and then go up here to the midpoint of that daily fair value gap. That was my expectation. And didn't quite go as expected. So from here, that's my framework. Let's drop down, or actually, let's just pull up my my trading chart, which I have it right behind this one. All right, so here we go. Here's my, having problems over here. Okay, here's my trading chart of what that looked like. Here's the 1 minute, okay? So, of course, we had the opening here, opening back here, right here, 9:30 open. We had an opening range gap, a very large one. Here's the high up here, and here's the low, and right here's the midpoint. So, we had that, and here's where we kind of came down, took that little bit of sell side liquidity that we had on that 15-minute chart, 1 hour chart, in that 1 hour fair value gap. And then look what happened. Came up and wham, displaced. And I mean, look, we just ran all the way up. Just straight up. All right. First presented fair value gap down here. So I'm like, all right, well, I know where's those areas that I'm expecting price to go to. Right up here. So we came here, had a little shift below this swing low here. No interest of. I have zero interest in taking this short. Now, if I traded a different model, right? Or if I had a different model trading, I absolutely could take a long right here. If I really believe we're going to run up through that buy side. That's just not my model right now. And as you can see, the body's closed in the upper half. You can long right there and go up, go up wherever you have a target. You can long right there. And then what do we have here? We have another one right here. As you can see, it kind of did this, and then bam, right in here. And then shot right up through that level. So that's 513 right up through here. I mean, that's almost 100. That's basically 100 points. Absolutely could have done that. That's not my model. Will I start doing trades like that at some point? Maybe, probably. Because my read was, okay, we took that sell side. There's no reason right now to come down here. Like, we're going to run through there. Maybe even there's turtle soups. There's so many different setups you could take, right? But, whatever. That's besides the point because I don't take those yet. I don't take those right now. All right, so now we finally made it up here. So what do? I want to see, here, let's remove some of this so I can show my thinking and everything. So now that we made this swing low here, right? Made this swing low. And we drew up into here where I was expecting. If you look, so now I actually want the market to take this swing low. Right here, first. So in order to do that, it'll need to create an inversion of all this. So I'm looking at that. And then we get that here, right? We get that. We trade through and create this inversion and take this swing. So now I'm like, okay, we have this inversion right here. But also, we have all this fair value gap coming down. So I'm like, oh yeah. My original thought was, I'm going to short when it comes back in here and touches. Oh, actually, this was right here. And touches inside here. And I'm going to look to short either through this low or this low, which is internal range liquidity, or maybe even try to hit the midpoint of the opening range because at this point, it's already 1016. So that was my thinking. And then I had my stop right up here. It's a larger stop than normal, so I went in with half the sizing. You can see right here, half the sizing. Because I'm on 4 micros on my live account now. So I'm like, all right, I know my stop needs to be up here. It's larger than normal. You can see 612. I got in at 48. That's about 64 points or something. But half the sizing with my money management would get me a normal size loss. So it's all good. No need to think or do anything different. Came up, did a bunch of action here. And at one point, I almost thought about cutting my trade because I knew it was going to fail, right? At a certain point, you know it's going to fail. And let me show you when I knew that was going to happen. So first off, got in, it failed to displace. Like I needed to displace, not spend a lot of time here, right? And then came down and then right here. Look at all these wicks, all these bodies closing here, right? And then right there, I was like, yeah. When we created this fair value gap, I'm like, no, I had my stop up here because above that inversion, I'm like, yeah, if we trade all the way up here and hit my stop, I went out. It's not going to work, right? Like that's why I have my stop there. That's the point where I believe I don't have my stop based on, I'm only going to have a 20-point stop. I'm only going to have this. No, I'll put the stop where the market needs to have a stop, and then I adjust my contract sizing. So that's what I do. So at this point, I was right above this opening range gap high right here. At this point, I'm like, if price crosses that, we're just going to keep going up. Or I don't want to be in it because it could stay in this area and it's not something I want to be in anymore. There's no reason to have it above these highs. Like there's just, yeah. So anyways, that's what I did. And at one point before it reached there, we created this. I'm like, yeah, I could tighten my stop here, but no, I'll just leave it. And then we ended up coming down and basically, just about creating an inversion here and creating that. And I was like, ooh, I might get a little bit of a chance. Let's see. But as soon as it trades back through this, I'm like, yeah, I'm for sure going to lose. But here's why I don't really tighten. I will tighten my stop, but why in this case I didn't need to because we never made a new low. So after it came back down here, like if it would have taken these lows, and I told myself if we come back down and take these lows, I'm going to break even because it's already showing high resistance. There's no reason to chance it anymore. If it can take these lows, it shouldn't come back up, and I'll just go to break even. But since it never took these lows, I left my stop there because here's the thing. Here's what messes up my discipline. If I tighten my stop and take a smaller loss, and then it runs to my target, I'm like, dang, why didn't I just leave my stop where I have it, where my money management allows it to be? Like, why didn't I just do that? that can mess up my discipline. So I'll just leave it. I'm actually better off taking a full loss because that's within my money management plan, right? So I'm better taking a full loss. I know people will argue with that, but for me, that's what works with my discipline. So I'm better off taking a full loss, or if I have a reason to tighten, than me just cutting a trade and then actually watching it run in my favor. I'd rather just take the loss. That's just me. So anyways, that's why I didn't do it. So as you can see, bam, little stop run here knocked me out. It did come back down, but it just kept playing. And then obviously, you know what happened the rest of the day. But today was a day where the tariffs were going to be announced in the afternoon. We have NFP this week. There's reasons the market might not quite do what it should be doing, because when I look at this, other than the midpoint of this daily fair value gap, like I don't really have any reason to not take this and go for my low-hanging fruit, other than it did make a nice little run down and, never fully created an inversion here. Maybe it's a B setup. I'll have to look into that a little more. But hey, I'm not mad at the trade. Like, it is what it is, and it lost. It's fine. It's over. Got to lose sometimes, right? So that's how that worked out. There's a few questions on my recap video from yesterday that I want to answer. But first, let's go and play the video real quick, and then I'll come back and answer those questions. So here's where we were running up. All right, I'm just going to fast forward it until we get to that point. So here's where I did mark that 15-minute inversion because I wanted to see if price did respect it, right? So that's where I was showing that 15-minute inversion, because I was like, oh, well, if price does stop there, and let's say this candle can't trade more than halfway above this wick, we might displace down. But then I'm watching it, and obviously we kept going up, so I got rid of it. So now at this point, I'm just waiting for the draw up there. That's all I'm waiting for. So I'm going to fast forward till we get there. Oh, this is where I was saying where you could have a fake, right? You have this swing low right here, okay? Or no. Yeah, let me back up because that's the 2-minute chart. Here we go. You have this little swing low. Made a little high, and then it took that swing low right here, leaving a fair value gap. That's the actual setup. That's the actual setup that I take. However, this is why you can't get too zoomed in on the 1-minute chart. Can't get too zoomed in on what you're looking at and why the higher time frames matter. 15-minute, 1 hour, the daily. That's why you have to do the drop downs, because the framework comes from the higher time frames, right? So my framework was I knew price is going to draw higher. I will not get trapped and tricked into this right here. But a lot of newer ICT traders will likely get trapped and tricked into this because you have a market structure shift, because technically speaking, because it took this swing. You have a fair value gap. It is bouncing off the midnight open. Oh, you can go short right here and go. But no, I had a higher objective for price to reach to. So I waited. And then you can see, took these little lows right here and displaced up towards that higher objective. Now, once we're reaching into this higher objective, that's when I start saying, now let's look for it. Now let's look for this setup, but here. Now, I needed it to be obvious, and I thought it was obvious, but this is why you need it to be obvious, because even though we're right here in this area, we do have previous day high right here. We do have the midpoint of that consequent encroachment of that daily fair value gap. Now, however, if I did have my fair value gap adjusted the other way that I was showing in the beginning of this video, that would have been higher at that 714 area. So anyways, I just wanted it to be obvious, and I was considering those things. So we'll see. We'll play it here, skip forward, hitting the midpoint, not closing above the midpoint of that 1 hour fair value gap there. Skip forward. So now I'm like, all right, we might be creating a little inversion with this highest fair value gap, although we did gap up this whole way. So I'm kind of looking at that. I'm watching here. I do want to see price trade below this swing right here for me to consider going short. And as you can see, here's the high of that opening range. We're going to come back into that range. I'm looking at where I could potentially take profits now. Have it all laid out in my head. Now I'm like, okay, we are coming down. Nice. Let's see if I have that 1 minute fair value gap. I mark out this inversion. And I want to see, like here, I'm like, okay, if we do pull back up into any of these fair value gaps before taking this swing, I'm not trading it. I have to have it trade lower than this swing and then come up first. So we can see right here. Now we took that swing. We traded all the way through this fair value gap. Now I'm like, all right, let's see. Pulling up. We got so close. It was 1 point away right there. I did not go short yet because I figured we're 1 point away, but we also have this inversion here. We're likely to trade back up into this area. But I wanted it as soon as we touched this where it overlapped with the inversion and the fair value gap, I wanted to immediately go short because I didn't want it to just touch it and go. So, and I know when you do that, you have to expect price very well could trade back up into this area. So that's why I had my stop way up here. We're going to fast forward it. Now here we go. We're going to reach back up. And again, this same thing happened to me yesterday. I clicked sell here and nothing happened. So I was nervous to hit sell again and it double up my orders. Same thing happened to me yesterday. I hit buy and nothing happened. And I had to do it again. So that's what I did here. Like, okay, nothing's happening. Then finally I was like, all right, let me click it again. And then it worked. So, but in this scenario, I am expecting price could trade back up into this area. But once we reach Once we reach here, let me pause it. Once we reach somewhere here, these midpoints and all that, I want to see displacement pretty fast, and it just never came. It just never came. So that's why I was like, actually considering cutting that trade short, but I didn't, so it's fine. And this one was in for maybe 10 minutes or so I will be speeding up the video. So I was trying to target the middle of the opening range. And then right here would be the low-hanging fruit, this low. I mean, I guess technically, actually, this one would be this low, but we'll see. So it pulled up. Oh, I got my P&L over there now. Pulled up, and at this point when we reached here, I'm like, okay, we should see displacement now. It just never displaced. And then we pulled up a little bit higher up in here. I'm like, okay, there's a few times I'm like, we should see displacement, and it just never happened. So let's fast forward. See, we pull up a little higher. I'm like, all right, now where's my displacement? I think after it hit the top, this opening range gap, I'm not gap, but the opening range high right here. I think that's where I was like, okay, we should see that displacement now. And then as it started pulling down here, I'm like, okay, here we go. Here's our displacement. See, we have these little fair value gaps here. I'm like, here's our displacement right through there. We had this little one here, but hit my entry. And that was it. Like, come on, man. Don't hit my entry and stall. It just never came. Fast forward a little bit more. Fast forward it more. Now we hit the high of the opening range. I'm like, all right, come on, displacement. Where are you? Let's get down there. Now I'm like watching here. I'm like, all right, here we go. Here we go. And I don't want to see price take the swing anymore. I want to see price displace through this low. And I don't want to see it take this swing anymore. But it heard me, I guess, and said, no, I'm going to take that swing. So fast forward it right there. This is when I knew I'm not going to win. This trade's going to lose. Right here. As soon as we took this swing with this bar, I'm like, the only chance I have is if this bar closes up and the next bar immediately closes completely below this one. Then that could be a bullish order block. A bearish order block. That's the only chance I have left. And let's fast forward a little bit. Like, all right, now we have this fair value gap. If we can create an inversion here, maybe, but otherwise, I've already basically considered this a loss. And then this happens. I'm like, oh, so technically I could cut my trade right now and I would save a lot of loss. And then we start, I'm like, okay, maybe here's the displacement now. Just needed a little bit more of a retracement. Here's my displacement. And then it's clearly showing me some high resistance conditions right now. So I'm like, all right, man, maybe we're going to get the displacement somewhere here. And then this was where I was talking about. I had that little fair value gap here. As soon as we come up and as soon as I see that we're going to trade through this, I'm like, yep. If we trade through this high, 110% I'm losing. No matter what. That's exactly what happened. Keep fast forwarding because it's just nothing left here to see. Nothing to see here, folks. But you can see it's a larger stop loss, but I was half my sizings, which gave me a normal loss. Normal size loss. There we go. That was it. And I hate that Ninja has that delay. $8,600 there. It happens. You win big, you lose big. As long as you keep your money management tight. All right, so that was it. That was that. So now let's address a couple of these questions, and then we'll hop off here. And I am at 30 minutes. I thought it was going to be a shorter one, but hey, whatever. It is what it is. All right, so the question is, when you enter a trade from a 1 minute fair value gap, do you look for some sort of reaction from price, or are you entering as price enters the fair value gap? Have you always done it this way, or do you ever use some sort of confirmation? And how do you get comfortable on just entering into a fair value gap, knowing it may run through it? Great question. That's actually a really good question. And right, because so you're essentially trading against what price is doing, right? So like if I'm shorting here, just like I did, price is going up and it's moving up, right? It's moving. So you're shorting as price is going up or vice versa. So yeah, it can be, especially in the beginning, a little bit nerve wracking. Like, man, this is going up, especially if it's going up pretty good. It's like, oh man, this is going up. But yes, so I typically am looking to short or, enter as soon as it touches that fair value gap. I don't really look for I guess to see a reaction. Every now and then I do, but that's typically only when my framework isn't as strong. If I'm not very clear on sell side, buy side liquidity or, imbalances, things like that for the day, which in hindsight, maybe I shouldn't take a trade. And that's actually what I've been focusing on, is being a lot more patient in making sure my framework is there. And I'm 100% convinced with my framework. That's the biggest key when you have the framework, the overall framework. Because I knew, like I said, after this action down here, I knew I'm not touching a trade until we draw here, right? Then I'm looking for my setup, and I just have to rely on my setup that it's going to work. And the second part to that is I really, really, really have to rely on my money management. You just have to, because we're going to lose, we're going to make mistakes. But if you have your money management in place, that's one of the biggest things that allows you to lose and make mistakes and still be profitable. So I know this setup, as long as the way I've been trading, as long as I have my framework and I take the specific setup that I'm taking, that's why I try not to do anything else. I know I average, and I have a year and a half of data with this now. I know I average around 60% of the time I'm winning. So when you do the math, as long as you risk as long as you make at least what you risk on a daily basis, and your win rate is over 50%, just the math tells you you're going to be profitable, right? But now if you bump that and you have a 60% win rate average, and your average risk reward ratio is above 1-to-1, let's say if it's a 1.5 or a 2-to-1, you're going to make a killing. And that's being wrong 40% of the time. So yeah, am I going to be wrong? Yeah. And I actually had a really great March where I averaged a little over 75%. Actually, it was 75%, I believe. And the reason why is because I waited for this framework, waited for my framework. And yeah, I just short when it goes in there. But as long as my framework is there, I can rely on it. Now, there are times I do look for an extra confirmation, which my thing, I do love. I don't look as much for breakers. I used to look for breakers, like, oh, if there's a breaker pattern, yeah, great. I'm just coming to the realization, I know how to identify a breaker pattern, but I don't think I know how to identify when it's a good breaker pattern. I think, obviously, if I'm at the correct draw and then you get a breaker pattern, yeah, I think, of course, that's going to be a higher probability. But I think I've just come to the realization that I can see the order blocks and rejection blocks so much better. So what I really like to see is I do like to see, with that fair value gap and market structure shift, I do like to see an inversion. So when we're making a run up to that final area, I do like to see a fair value gap form at the high and then an inversion of it pretty quick. When I see that, that's a good confirmation. If I see we had an order block when we came down, like a bearish order block, that's a good confirmation. Or a rejection block at that draw, that's a confirmation. And if you don't know what those things are, go to ICT's video or playlist, 2016 mentorship, month 4, and those are in there. Order block, rejection block. I don't remember if inversions are in there. But literally all an inversion is when a fair value gap gets traded through and closes on the opposite side. So anyways, so yeah, that's that to answer that. I hope that answered the question. Let me know. And of course, as always, any of these recaps, if you have a question on anything, leave it in the comments and I'll address that. I'll answer it to the best of my knowledge, the best of my abilities on the next one. And remember, this is ICT Concepts. You can learn it all on his YouTube channel for free. This is simply my perception of it, how I trade it, and yeah, the way I view it. So, you know, it's all, I'm not ICT. So anyways, that's all for today. That's this trade recap. Yeah, I think I've just accepted my fate. My recaps are going to be around 30 minutes long. But maybe one day I'll get it down to 20. Anyways, have a wonderful day. I hope you are doing well in your trading. And as always, trade well, everybody. See you later.